So let's just get right to it. In politics, there are always questions about money and influence. But what happens when we're talking about billions of dollars in personal wealth? Today, we're asking a pretty direct question. Is the President of the United States using his office to profit from the crypto market? Let's follow the money and see where it leads. To really understand what's happening now, you gotta rewind the clock just a few years to 2021. Back then, Donald Trump was not a fan of crypto. Not at all. He wasn't just cautious, he was out there on the record calling Bitcoin a scam. But fast forward to today, and wow, what a difference. The tune hasn't just changed, it's a completely different song. He went from skeptic to campaigning as the crypto president, and his administration's policies have been aggressively pro-crypto from day one. So that total 180 really makes you wonder, right? What changed? Was it a genuine change of heart on economic policy? Or is there maybe a much simpler, more profitable explanation? Well, to figure that out, we need to do what we said we'd do. Follow the money. So let's start right there. We're going to dig into the president's personal crypto holdings, an empire that has frankly exploded in value in a crazy short amount of time. All right, let's start with this number, which just jumps off the page, $57.4 million. According to his very own 2025 financial disclosures, that's what Donald Trump personally made from his crypto venture in just 1 year. And let's be super clear, this wasn't money sitting in some hands-off blind trust. This was direct income. But that yearly income, that's just a tiny piece of the pie. The total value of the Trump family's stake in their crypto firm is just staggering. As of late 2025, after its token went public, that stake was valued at an estimated $5 billion. And you can see here, this isn't just about one lucky investment. We're looking at a whole crypto portfolio. The big one, of course, is World Liberty Financial, a firm the family has major control over. But there are also personal wallets with Ethereum and even meme coins branded with their own names. This is more than just investing. It's building a whole financial ecosystem where the Trump brand and the crypto market are becoming one and the same. Okay, so we've established this massive personal financial stake. The next logical question is, so what? Does this actually influence official government policy? Well, this is where the lines between power and profit start to get really, really blurry. I mean, just look at the speed of this. Kicking off in January 2025, the administration unleashed a policy blitz. First, an executive order for friendly crypto rules, then a plan for a national Bitcoin reserve. After that, the Department of Justice basically hits the brakes on old enforcement actions, and the SEC does a complete 180 on its guidance. In just a matter of months, the entire regulatory game was changed. And the market's reaction? Well, it was predictably wild. You had Bitcoin rocketing to a new all-time high. But then you had all this whiplash as traders tried to figure out what was going on. Every single announcement from the White House sent shockwaves through the market. So let's just connect the dots here, right? The same people who were making these huge, market-moving policy decisions were also personally invested, and in some cases, heavily invested, in the exact same industry they were now in charge of regulating. But this wasn't just about the president. To really get the full scale of this financial entanglement, you have to look at his team. The people he appointed to run the country. 216. By early 2026, that's how many of Trump's political appointees personally owned cryptocurrency. Now, to really understand how wild that number is, let's just compare it to the last administration. Under Biden, you had about 24 officials who held combined less than $7 million in crypto. Under Trump, over 200 officials, holding up to $340 million. It's not just a different ballpark, it's a completely different sport. Let's zoom in on one specific example. Deputy Attorney General Todd Blanche. When he was appointed, he held almost $500,000 in personal crypto. Just a month into his job, he issues a big memo that basically shut down federal crypto investigations. And here's the real kicker. He did all of this before he sold off his personal crypto, which he had promised he would do. Yeah, that move immediately set off some major alarm bells. Virginia Cantor, an ethics lawyer who worked in both Republican and Democratic White Houses, didn't pull any punches. She called it, flat out, an obvious conflict of interest. So, unsurprisingly, this kind of overlap between personal bank accounts and public policy didn't go unnoticed. Government watchdog groups saw what was happening and immediately started raising the alarm, filing a whole wave of official complaints. And these complaints really center on a basic, fundamental piece of ethics law, the Federal Conflict of Interest Statute. The idea is simple. It says government officials can't participate in decisions that could have a direct and predictable effect on their own money. It's supposed to be the firewall between serving the public and padding your own pockets. So, using that law as their basis, the Nonpartisan Campaign Legal Center filed formal complaints. They're asking for official investigations into top officials, like Todd Blanche at the DOJ and also the Commerce Secretary, Howard Lutnick, arguing that they made policy decisions that directly benefited their own investments. And it's not just about what individual officials own either. Critics are also pointing to patterns that look pretty suspicious. Take the firm Crypto.com. Under the last administration, they were facing a big SEC investigation. Then, after the election, they donate $11 million to Trump's inaugural and super PAC committees. Soon after, the SEC investigation gets dropped. And finally, Crypto.com announces a major partnership with Trump Media. You can see why a timeline like that raises some serious pay-to-play questions. So after all of that, where does this leave us? I mean, what are the long-term consequences of this whole new approach to ethics in government? Well, it's a huge break from the past, a massive one. I mean, think back to President Jimmy Carter. He put his family's peanut farm into a blind trust just to avoid even the appearance of a conflict. Compare that to today. President Trump got rid of the executive branch ethics pledge while his family launched a multi-billion-dollar crypto business during his campaign. It's just night and day. What you end up with is an overlap that is, historically speaking, totally unprecedented. The private business interests of the president and his top staff seem to be almost perfectly aligned with their administration's policy goals. The lines that have always separated public service from private profit aren't just getting blurred. You have to ask if they're disappearing altogether. And that leaves us with the one fundamental question that really matters here, not just for this administration, but for the future of how our government works. When the personal wealth of our leaders and the public policies they create are this tangled up, who are they really working for?